Hello everyone, thank you for tuning into my channel. Before we start the basic terms used in a stock market, let me make this thing clear that this video is neutral for all types of audience. If you are first if you have a first encounter with the stock market or you have a basic knowledge about the stock market, this doesn't matter. This video is actually catering to needs of all types of audience, and even if you know the terms used in this video, watch it till the end because you might walk out enlightened in a certain way for at least one or two words, if you even if you have a basic knowledge of the stock market. So in the basic terms used in a stock market, the first term we would be taking is the stock. What does a stock mean? A stock generally shows that you are the owner of owner of certain part of the company, meaning to say that whatever benefits an owner enjoys if he owns a business, in the same way you will be enjoying those benefits. By benefits I mean dividend, right shares, bonus shares, etc. So if you are owner of a stock, this means you own a certain part or a certain percentage or a certain fraction of the entire company, meaning to say that if suppose Reliance has 1 lakh shares outstanding, this is just an example. If Reliance has 1 lakh shares outstanding and you own 10,000 shares of the company, this means that you are owner of 1/10 of the company. And suppose if the company declares a dividend of say 1 lakh rupees, you are entitled to 10,000 rupees without any problems. This means to say that you are the owner and you are entitled to all the benefits what a company gives out to all of its owners. So how to buy a stock? You have to transact with a stock exchange. Now a stock exchange is an institution where companies list their stocks. Stock exchange facilitates trade of stocks, trade of financial instruments. Actually, by financial instruments I mean bonds, debentures, derivatives, in addition to shares also. In India there are more than a dozen stock exchanges, but two big names always come up, that is the NSE and the BSE, the National Stock Exchange and the Bombay Stock Exchange. Now to transact with the stock exchange, you need to enter in with using a broker. Now a broker is an intermediary with whom you open a demat account and through whom you make transactions of buy and sell of financial instruments, not necessarily shares, but bonds, debentures, derivatives like futures and options. The broker is a person who transacts with the stock exchange on your behalf. If you place a buy order with the broker in turn place a buy order with the stock exchange. Broker is a person who initiates the stock transaction and ends it out. But to buy a share or sell a share, you have to place an order. An order is an intent to either buy or to sell a financial instrument at a certain price. There are many types of orders. There is a limit order, there is a market order, and bracket orders, cover orders. We will be discussing types of orders in the upcoming video series. Next term used in the order is a bid and an ask. Bid price is the buy price where you buy the stock, and the ask price is the sell price. Bid price is the buy price and ask price is the sell price. Now when you buy a stock or you sell a stock, you are of a certain view and take a certain position in the market, meaning to say that you either go long in the market or you go short in the market. Long position means that you have brought the shares and you are expecting that the markets will go up. Long positions are usually used in a bullish market where you buy at a lower price and sell at a higher price to make profits. However, short position arises when you sell a certain stock or index and buy it out at a lower price. Here you are expecting the market to be bearish. Now bull and bear means If you are bullish in the market, this means that the market is going to rise. If you are bullish, you buy at a lower price and sell at a higher price. Now bear market means that you are expecting that the market will fall or the stock will fall. In a bearish market, the strategy adopted is sell at a higher price and square out at a lower price. Next term used is an initial public offer. The synonym for this is an IPO. This is when a company lists itself for the first time and raises capital. Now, presently, you have companies that are already listed on the stock exchange, but initially, when they wanted to raise funds, they had gone for an IPO and then listed themselves. Recently, when I am recording this video, the recent IPO that has been listed is Burger King in India today. Next term used is an index. Index actually means that this is a benchmark. Now suppose you might have heard the term Nifty 50 in India. Nifty 50 is an index of 50 companies that are powerful in the stock exchange. Now suppose let me consider two companies, so say Reliance and Bajaj Finance. If Reliance is up and Bajaj Finance is down, you do not get an individual view on the stock market. But when you say that Nifty was up by 2%, this generally means that the stocks in the Nifty 50 have performed well, saying that they have risen by 2%. This doesn't mean that all the stocks have gone up by 2%, but overall generally the market has risen by 2%. Now there are many kinds of indices actually, meaning to say that the National Stock Exchange has Nifty, Bank Nifty, the Bombay Stock Exchange has Sensex, American stock exchanges have Dow Jones Industrial Average, and IT index called as the Nasdaq. Next is a term called intraday trade. Intraday trade is a style of trading where people buy or sell stocks uh, on a day and square off the position, meaning they take the opposite position on the very same day, meaning this trade has to conclude by the end of the day. Supposing after the markets open at 9:15 in India, you have time limit to book profits or square off the trade till the market closes in India, that is in the afternoon 3:30. Next is a term called dividend. When I explained the word share to you, I told certain benefits what a company gives out, meaning to say that when a company earns profits, it declares dividend, and this is distributed to all the shareholders, or meaning to say all the owners. Next term used is derivatives. You might have heard the term called as F&O in the stock market. F&O means futures and options. Futures and options are derivatives traded in the stock exchange. Now, what actually are derivatives? Supposing that there is one word called as the underlying. Underlying means there is something that is driving the value of the derivatives. Meaning to say, if I have brought a future on say Dr. Reddy's stock, if Dr. Reddy's stock rises by say 100 rupees, this affects the future price also. Future is a financial instrument that derives its value from the value of share of Dr. Reddy's. Now, futures and options might be on shares also, might be on index also, might be on commodities also. This is a wide range and this will be discussed in the future video. This is just for the basic understanding and will be discussed further in the next videos. The last term for today is market capitalization. Market capitalization actually means that if the company sold all its shares at today's market value, what value would it fetch? In simple terms, the formula to calculate market capitalization is number of shares outstanding of the company into the market price prevailing in the exchange. Just to clarify that if the company sold all its shares today at market price, what value would it derive or what money would it fetch? This is the terminology given to market capitalization. So we have completed certain terms. In the next video I will come up with certain other basic terms used in the stock market. Thank you for watching this video. Please consider subscribing, because I will be putting up another series all relating to basics of stock market. Thank you very much for viewing. Thank you.